Hey everyone, welcome to the Unicorn Method. If you're new to Forex and futures trading and want simple beginner explanations, then you're in the right place. On this channel, I will break down Forex and futures trading into simple concepts for beginners. So thank you so much for clicking on this video, and I'm so excited to share this information with you guys. So let's get started. In this video, we're going to talk about what Forex trading is and how the Forex market works. Now, if you're new to trading or wondering how people trade currencies around the world, this video will give you a simple beginner overview. So let's get started with the basics, what Forex actually is. Okay, so Forex trading stands for foreign exchange. It's the global marketplace where currencies are bought and sold. So instead of trading stocks and companies, Forex traders trade currencies like the euro, the US dollar, or the British pound. And there are other commonly traded currencies as well, including the Japanese yen, the Australian dollar, and the Canadian dollar. And these currencies are traded every day in the global market. Now, currencies, they're always traded in pairs, which means you're comparing the value of one currency to another. So, for example, a common pair is euro and USD, which compares the euro to the US dollar. So let's say the price of euro USD moves from 1.1000 to 1.1010. That change in price is how traders look for potential opportunities in the market, or in other words, potential profit. Now, the Forex market is actually the largest financial market in the world with trillions of dollars traded every day. So think of it like exchanging money when you travel. If you exchange US dollars for euros, you're participating in the foreign exchange market. And Forex traders are doing something similar, but they're watching how the value between currencies change. And these are some more of the major currencies that you will see in the market. So we have USD, which is the US dollar. Then we have GBP, which is British pound, CHF, Swiss francs, AUD, Australian dollar. And then we have the euro, EUR, JPY is Japanese yen, AUD is Swiss francs, and CAD is Canadian dollar. So like I said, you'll see these different currencies when you look into the market. All right. And now we're going to talk about how Forex trading works. So how Forex trading works, like we just discussed, is by comparing the value of one currency to another. So because currencies are always traded in pairs, traders are watching how the price between those two currencies changes over time. Like the example I gave you guys with the euro, USD. Now, if the value of the euro becomes stronger compared to the dollar, the price of that pair will move up. And if the euro becomes weaker compared to the dollar, the price will move down. So as I said, if the price of euro USD moves from 1.1000 to 1.1010, then that means that euro has become slightly stronger compared to the dollar. So here's an example. So here we go. It becomes stronger. And then if it moves down from 1.1000 to 1.0990, then that means that price has gotten weaker compared to the dollar. So the traders, they watch these price movements as currencies change in value throughout the day. Now we're going to talk about what is a currency pair. So in Forex trading, currencies are always traded in pairs, and a currency pair shows the value of one currency compared to another. So as I said before, the euro USD, that compares euro to the US dollar. And so the first currency, which would be the euro in the pair, is called the base currency. And the second, which is the US dollar, that is the quote currency. So when the price changes, it shows how much of the second currency is needed to buy one unit of the first currency. So for another example, if the price for euro USD is 1.1000, that means 1 euro is equal to $1.10 in US dollars. And if the price for Euro USD is 1.1200, then that means 1 euro is equal to $1.12 in US dollars. All right. So here's a example of it. So we have the Euro USD, which is 1.1000. So 1 euro is equal to $1.10 in US dollars. Now we're going to talk about what a pip is. In Forex trading, price movements are measured using something called a pip. A pip is the smallest standard price change in most currency pairs. So for example, the price of Euro USD moves from 1.1000 to 1.1001. That movement is called 1 pip. And if the price moves from 1.1000 to 1.1010, then that's 10 pips. And for example, right here, you see we did 1 pip. So if it's 1.1000 and then 1.1005, that's 5 pips. Then the same thing, 10 pips. And as we said before, 1 euro equals $1.10 in US dollars. All right, so why people trade Forex? So many people are interested in trading Forex because it's the largest financial market in the world. And actually over $7 trillion are traded in the Forex market every single day. So the market is open 24 hours a day during the week, and that allows traders around the world to participate. And because currencies are constantly changing in value, traders watch these movements and they look for opportunities to make profit in the market. And it runs, why it runs all day is because the Forex market runs through major financial centers like London, New York, and Tokyo. So because so much money is constantly being traded, the market has something called high liquidity, and that means currencies can be usually bought and sold very quickly. So liquidity simply means there are always buyers and sellers in the market. And the Forex market is also considered accessible for beginners. So because traders can start learning about the market with relatively small accounts compared to some other financial markets. So you don't have to have a large account to start trading. You can start trading with a small account and you can actually grow that. Now we're going to talk about the risk of Forex trading. So while Forex trading can provide opportunities, it's important to understand that trading also involves risk. You have to remember that currency prices can move very quickly and losses are possible in any trade. Even if it's a good trade, there's still a possibility of a loss. So this is why traders focus on things like discipline and risk management. Now, if you want to be a successful trader, you have to understand that the market can move both up and down, and you have to work to manage your risk while participating in the market. So another challenge that traders face is emotions. So when people trade, emotions like fear, frustration, or excitement can sometimes lead to poor decisions. So learning to control emotions is one of the most important parts of trading. So for example, some traders may feel fear and close a trade too early, and then others may feel frustrated after they lose a trade and they might try to rush into another one. Now that is actually called revenge trading. And then some traders, they may also feel overconfident for a win and take unnecessary risks. Like you may win and then you might see like it might still be going up. Like you'll win and get taken out and then you'll see like it's still going up. So you'll be like, oh, well, maybe I can get in here and make some more money. That's a very unnecessary risk. When you're out, just stay out. So please remember you have to control your emotions when trading. All right, so common beginner trading mistakes. So many new traders make mistakes when you first start trading. And this actually brings us back to what we discussed in the last slide, letting your emotions get out of control. It can lead to over trading, which is when someone takes too many trades instead of being patient. And it's very important to be patient when you're trading because you definitely don't want to rush into the market. I've made this mistake a lot of times and it's always given me a bad outcome. So remember, you have to stay patient. Now, another common mistake is revenge trading. And that's where someone tries to quickly win back money after a loss. So I've done this as well, and I'm telling you guys, do not revenge trade. That can mess up your account so badly because you're upset about losing your trade and you think that if you get back into the market quickly, you can win the money back that you lost, and you could actually lose even more. So if you lose the trade, just say, okay, I lost the trade, but I can try again tomorrow. And one of the biggest challenges for beginners is trading without a plan. A trading plan helps guide your decisions and keeps you from making emotional choices in the market. So without a plan, traders may enter trades randomly or based on their feelings rather than discipline. So you guys have to have a trading plan. Now, I follow a trading plan every single day, and it helps me so much. And make sure you follow your trading plan every time you get into the market. A trading plan helps traders stay consistent instead of reacting emotionally to every market move. Now I want to talk to you guys about the importance of discipline. So successful traders, they don't rely on luck or emotions when making decisions. So instead, they focus on following a trading plan, like we just talked about, managing risk and staying consistent over time. So discipline helps traders avoid many of the common mistakes we talked about earlier, like overtrading or revenge trading. So learning to stay patient and stick to a plan is one of the most important skills a trader can develop. So always remember, follow a clear trading plan. Make a trading plan, stick to that plan every single day. Do not go out of your trading plan. You don't want to make random decisions when getting into the market. Manage your risk on every trade. Avoid emotional decisions. Keep your emotions in check. Don't let your emotions interfere with your trading. Stay patient and consistent. Do not rush into the market. All right, guys, this concludes my video talking to you guys about Forex trading. I really hope this information helps you guys with your trading journey. Now, I'm currently working on building more resources to help beginner traders learn about Forex and futures trading. So I'll be offering beginner trading guides, classes, and discounted educational content for traders who want to learn more. And I'll also be offering one-on-one sessions for anyone who wants to learn more about how I trade. And also you can trade alongside me. Now I also have, like I said, classes as well. So please stay tuned for more information regarding these resources. And if you've enjoyed this video and want to continue learning, make sure to subscribe so you don't miss future videos from the Unicorn Method. Thank you guys so much for watching, and I will see you guys in the next video. Thank you.